Here with more on that, plus oil outlook as tensions rise in the Middle East is Chris Wright. He's the chairman and CEO of Liberty Energy, the second largest fracker in North America. Chris, welcome back. It's good to see you.
Great to see you, Kelly.
Did I get that right? You just hiked the dividend by 40%. Is that variable or that's fixed?
Got it all right. No, that's our fixed dividend. We've grown the earnings power of our shares dramatically over the last 2 or 3 years, and so we reset the dividend 40% higher.
Wow. So talk to us a little bit about how the entire energy space right now has investors who absolutely love it, and then some tourists who get frustrated by its volatility. So just kind of walk us through the fundamentals that you see for the next couple of years.
Yeah, like the last 10 years has been highly volatile for our industry, from macro conditions and too much overinvestment, too much erratic behavior. I think our industry's consolidated to fewer companies, a little more disciplined behavior, relatively tight supply and demand in the global scale for oil and natural gas. So business outlook, I think, is pretty solid. I think we're going to see still, of course, it's still a cyclical commodity, but I think we'll see more stable behavior in the next few years than we've seen in the last few. And outlook for Liberty's business is quite strong.
How do you see the war in Israel, between Israel and Hamas, affecting the supply issues, affecting the supply and demand balance?
Well, Tyler, so far, no impact on global flows of oil from the war. There has been a small downturn in global flows of natural gas. A Tamar gas field offshore Israel has been shut. Just that smaller field being shut and some sabotage in the Baltic Sea at a natural gas pipeline have already popped natural gas prices in Europe about 20%. They were already in a fragile situation to begin with. So far, it hasn't moved oil markets except a little bit of that fear premium. Maybe oil's $5 or $8 higher than it would be otherwise. The fear is, does Iran get more directly involved in the conflict? That would be a game changer.
Because that would mean stiff sanctions on Iranian production, even more than we have today.
Absolutely. And of course, what we've had today is we've sort of looked the other way the last 9 months, and Iranian exports have grown a lot. But yeah, if Iran is directly involved and there's a curtailment of the flow of oil from Iran, oil is certainly well over $100 a barrel.
How would you? I'm not familiar enough. Maybe you can tell me where your production comes from, what parts of the country you operate in. How would you characterize domestic energy supplies? High, low, middle, what?
Yeah, so right now, U.S. oil and gas production, all-time highs. Both are at all-time highs. But there's disciplined investing. We're not growing oil production as fast as the country could grow oil production. And my company, we help other companies produce oil. So we frack nearly 20% of all the wells drilled in the U.S. and Canada. So, we work from Northeast British Columbia down to the Mexican border. So we're in all the basins, and we work with basically all the company names you know. And the public companies are disciplined and careful in their approach, flat to very modestly growing production, and they don't change their plans very quickly, at least not anymore. Private companies are different, Tyler. If oil prices spike up, they'll increase their activity. You'll see a response in American production, mostly from the privates, to a sudden big rise in prices.
Chris, thank you so much. Hope we can count on you coming back again sometime soon.
Thanks, Tyler. My pleasure.
Chris Wright.